Hi, welcome to Easy Payroll Guide. My name is Karin Hutchinson, and in this video we're going to talk about the definition of a salary. When you hire your first employees, you have to decide how you're going to pay them. Are you going to pay them a salary or an hourly wage? Each pay period, you have to determine your employee's gross pay. Their gross pay is what you will pay them before any deductions or taxes are subtracted. If you pay them a gross pay based on a salary, then you will pay them a fixed amount each pay period. Meaning that when you hire an employee, you might say to them, I'm going to pay you a salary of $25,000 per year. You're going to take that amount of $25,000 and break it up evenly among the number of pay periods that you have that year. And each pay period, the employee would be paid the exact same amounts. And at the end of the year, it would total the $25,000. You can determine a salary based on a yearly salary, or you might be able to say, I'm going to pay you a salary of $500 per week. You can fix it as a weekly salary or a bi-weekly salary, however you would like. But the main thing is that you will pay that employee the same amount every pay period. You may decide to pay an hourly wage, and that means that their pay is dependent on the number of hours worked. So if your employee works 10 hours per week, they would earn less than if they worked 20 hours per week. So before you even begin to pay your employees, you need to decide whether you will pay them a salary or an hourly wage. Some employers decide to pay a salary because they feel that if they pay a salary, they don't have to pay overtime. That can be a misconception because under federal guidelines, there are exempt salaried employees and non-exempt salaried employees. Exempt salaried employees are what most people think of as a salaried employee. They are employees who receive a salary every pay period and are exempt from overtime pay, meaning that they cannot receive overtime even if they work over 40 hours per week. The Fair Labor Standards Act, which is also known as FLSA, says that only an exempt salaried employee can be exempt from overtime. So what we're going to talk about next is what classifies a salaried employee as exempt. An exempt salaried employee must meet 3 guidelines. The first guideline says that the job must be managerial, executive, administrative, sales-related, or computer-based. Computer-based means that the job must be a professional computer-based job, such as a systems analyst, a computer programmer, a software engineer, or another similarly skilled worker in the computer field. Most of these positions are higher level positions. The employee must also have a salary that is at least $23,660 per year, which breaks down to about $455 per week. This is the minimum salary in order to be exempt from overtime pay. And lastly, the employee must be paid on a fixed salary basis. So they must be paid that salary each and every pay period. So you have to remember that in order to classify an employee as a salaried employee that is exempt from overtime pay, they must meet all 3 of these requirements. Otherwise, you will have to pay overtime if they work more than 40 hours per work week. So as a special note, something that you will need to keep into consideration is that if your employee does not meet all 3 of those requirements for being exempt, and you still classify them as salaried employees, you must still pay overtime if they work more than 40 hours per week. You can still pay an employee a salary, but they would be a non-exempt employee, meaning that even though they receive a salary, you still must pay overtime. So let's take a look at a scenario, and we're going to determine whether or not this employee is exempt from overtime or non-exempt. So John receives a job offer for a computer programmer position, and it pays $62,000 per year. He's paid every 2 weeks, and he receives 26 paychecks per year, and each paycheck he will gross the same amount, $22,384.62. John knows that he can count on his paychecks being consistent and always grossing the same amount of money, and he was told that he's being paid a salary. John has to work late many nights, and he was told that even though he has to work late, he will not be compensated for that extra time spent at the office and any hours that he works over 40 hours. So, do you feel that John is exempt or not exempt from overtime pay? If you decided that John would be an exempt employee, then you are correct. He is exempt from overtime pay. He's paid a salary every 2 weeks. He's paid more than the $23,660. That is the minimum requirement for a salary. And his job description, being that he's a computer programmer, meets the description listed under the FSLA requirements. And you can go to their website to get a more detailed job description for each of those jobs that are required in order to be exempt. So because of these 3 requirements, John is a salaried employee who is exempt from overtime pay. You would not need to pay him if he works more than 40 hours per week. Let's look at another scenario and we'll determine the same thing. Is he exempt or not exempt? You just hired Joe, and he's your data entry clerk. So he is holding a computer position. You want to pay him a salary of $20,000 per year, and he will be paid $769.23 every 2 weeks consistently. So is John an exempt employee? You want to pay him a salary, and you would prefer not to pay him overtime if he does work over 40 hours. If you've determined that he is not exempt, then you are correct. Why is he not exempt? Well, even though you've considered him a salaried employee and you're paying him a fixed amount, he's not exempt, and you must pay him overtime if he works more than 40 hours per week. He's not exempt because, first, his salary does not meet the minimum requirement. You have to pay $23,660 per year as a minimum, and you're only paying him $20,000 per year. His job description, most likely, if you read the FSLA guidelines, does not meet the administrative or the computer-based job descriptions. A data entry clerk is not a higher level position and therefore would most likely not be listed under those guidelines. So you have to read those guidelines very carefully if you're determining whether the job description meets the exempt status. So even though you consider him a salaried employee and you pay him consistently, if he works over 40 hours per week, you must pay him overtime. And that is a federal law. One thing that I want you to be very, very careful about is how you classify your employees, and in making sure that if you classify them as salaried, that they are truly exempt from overtime. If you do not meet all of those requirements and you deny your employees overtime when they're not exempt, you're going to end up paying more in the long run in attorney's fees and other fees. So you want to make sure that you are fair to your employee, and if they deserve overtime pay, that you pay them overtime pay. And if you have questions, please visit the FSLA website for more information on classifying these employees, because this is a very important step as you begin the hiring process. I hope that this has helped you to understand salaried employees versus hourly wage employees, and thank you for visiting Easy Payroll Guide.